We all want to lock in gains on our stocks. A lot of people use stop losses to achieve that. But is a stop loss really the best way to lock in gains on your stocks? Hey, welcome back everybody. I'm Carl Eggerss. You've heard a lot about stop losses. A lot of traders use stop losses. Sometimes investors use stop losses. And it's a way to put in a floor under a stock or an ETF or any other investment so they can get out at a particular price. And they're a great tool. I mean, most of the time they work. You're at work, you're doing something else, the stock starts to fall, and it automatically triggers without you having to do anything. However, here's the problem with stop losses. A stop loss order is not just a sell order at a particular price. What it says is if it hits that price, it turns into a market order. Well, a market order can be anything. And so if a bunch of people are selling at the same time and it hits that price and there's too many sell orders coming in, guess what? It may not hit that price that you wanted. It may sell for a much, much lower price. Probably a classic example of this was back in 2010. In fact, May 6th of 2010, there was something called the flash crash. If you remember that, the Dow Jones fell over 1,000 points in literally just a few seconds or minutes. Well, during that time, many stocks fell 10, 20, 30% in a matter of seconds and then came back up. Here's the problem. Take a look at the screen. Here's an example of Proctor and Gamble in 2010, and you'll see there's a long bar going down, and that bar shows where Proctor and Gamble traded that day. So you'll see it was trading around $47, and then it went all the way down to $30 per share, and then went back up within just a few seconds, back up into the high 40s. Well, guess what? A lot of people had their trades executed at $30, $32. Those weren't errors. Those weren't reversed. Those were stop loss orders that all triggered at the same time. Why that happened, how that happened, a lot of people still don't know. But the bottom line is that was a great lesson in the negative of using stop loss orders. Because it's not some magical number that locks in a particular price. It is saying when it hits that price, it turns into a market order. Here's the other problem with stop loss orders is whipsaw risk. What's whipsaw risk? Well, whipsaw risk is the idea that the stock is going down, you're at work, it triggers, you're happy that you got out at a particular price, it did it automatically for you. And then guess what happens? As soon as it triggers, it starts to reverse and head back up again. And now you just sold at the lows and the stock is working its way back up. So whipsaw risk is a big concern when using stop loss orders. The other thing is, what about if you forget about a stop loss order? Sometimes we've seen people where that's happened, where they had a stop loss in, the stock falls, it triggers, they're sitting in cash, they didn't know it triggered, they didn't know the stop loss had hit that particular price, and now they're sitting in the money market or cash for several weeks or months, not knowing that that order had triggered. So you have to manage those stop losses if you use them because they have expiration dates. You may have to adjust them from time to time as well. Now, use stop loss orders if you wish. Most of the time, they do work, particular for people that are watching the market very closely. I like to use something called conditional stop losses. And this isn't something automated. Basically, what I'm doing is saying if a particular stock meets these certain conditions, I'm going to sell it. It could be fundamentally related. It could be technically related. It could be any variation of things. But if certain conditions are met, that's what's going to make me sell the stock, not just a particular price. But again, for people that are trading a little more often and wanted a little more automation to the system, stop losses generally do work until they don't. So there are some great examples, again, as I suggested, that where they didn't work. And so just be very careful if you use stop loss orders. If you know how to use them, you know the flaws to them, then go for it. Otherwise, for most folks, pay attention to what you own and have certain prices that you would sell out on your own, not an automated system. Don't forget to subscribe to our YouTube channel.